Hello and welcome to another episode of the Swing Trader Status Update. This is our weekly show that we do live every Tuesday starting at 2 p.m. Or roughly 2:05 p.m. Pacific time. That's 5:05 for you Eastern time zone folks. And I'm Justin Nielsen, your host. Joining me as always, or as usual, is Mike Webster, our senior market strategist. And we've got some swing trader stuff to talk to you about. Mike, what a day. Let's go ahead and start with the NASDAQ composite. Last week we were talking about how well, actually, you know what, I'm going to change it up on you. I'm going to start with the S&P 500, and we're going to talk a little bit about how last week we were talking about this really great looking setup that we had on Tuesday, and that certainly did come to fruition. We got a nice move here on the S&P 500, but it really seemed like the NASDAQ was what kind of ruined the day today. Down a little bit over 1%, losing a lot of ground after a strong gap up yesterday. Is it damaged goods or just another one of those little, I don't know, bricks in the wall?
Another brick. We're going to do the Pink Floyd already. So look, it was a bad day, and it felt worse than these averages look. Like the 1% there. Let's just pull up SMH, for example, because this is really where all the damage came from. You know, that was down over 5%, and a pretty broad-based ETF, sector-based ETF, obviously chips only. And might as well go to the culprit, ASML.
Yeah, if you got to lay the blame somewhere, ASML is a great place to look.
Yeah, because things were pretty much fine until that, you know, from everything that I saw, and this is earnings season, right? And we always expect we're going to have days as strong as we were down. As much as we were down today, we'll be, you know, up that much, you know, at some point during this earnings season, and probably down even more than we were today. It's all this volatility around the earnings just makes it very tricky. So when things are tricky, you want to go back to what do you know? And let's go back to SPY, where you started off with, and let's just go over some things that we know. We know that we're in a power trend, and that is, you know, with the 21-day, you know, the low being above the 21-day for 10 days, and the 21-day being above the 50-day for 5 days or more, and a few other things that we talk about all the time. And we had that, then it went under pressure when it broke the 50-day, and then it was reinstated once those things happened again. And of course, the 50-day went back up in an uptrend. So we're in a power trend. So that means you lean bullish. And then on top of that, as you were mentioning, last week we were set up, and all those setup days that you were pointing out last week that we'd had over the last several months that didn't work, but we said, you know what, you don't really want to change your stance, you know, unless there's something materially different. And so we didn't. So we were still heavy going into that because it was a setup day. And, you know, we did have this nice move up. So it was following our expectations. What else is our expectation? That we're in earnings season, we're going to see volatility. And that's what we saw today. We just prefer volatility that moves up rather than volatility that moves down.
Volatility works both ways, right?
Yeah. And when you have a bad down day, you know, I always kind of think of it as they tend to be, that's your first day of 3 days down. Now, they don't always work out that way. We could just gap up on some news tomorrow, and this is just a blip. But I always kind of mentally prepare to have like another bad day after a bad break. And then the third day, lots of times you're hoping to get some more selling, but then an upside reversal.
And we've seen, by the way, a number of times. I mean, just if we look at this day right here, you know, a down day looked bad. You would have expected it to go down worse, and it didn't. It gapped up the next day. You know, some of these days here didn't look that great, but yeah, it didn't kind of come to fruition. So there has been a feeling of the market not wanting to go down.
Yes, exactly. And I think a lot of that can just go back to the Fed. And we've talked about this on the show and on IBD Live, you know, a lot, that, you know, the Fed is now back in control, in my opinion. And so we have that tailwind but that doesn't mean it's going to be easy, and it doesn't mean it's going to go straight up. So what do we have? What do we know? Our low is well above our 21-day. It could still come in some and still look normal and natural on SPY. We're in a solid bull market, but we're in the middle of earnings season, and you don't know what the news is going to be tomorrow or Friday or next week. So you just have to pay attention to your instruments and be flexible. So when things like, ASML were bringing down the tech sector today, let's maybe go back to the ASML and just see how bad that was. But that was already in a weak position.
Right. Yeah, this was below the 200-day moving average line. It's not like we were going to buy this, and it's not like we wanted exposure to it, but it does. And for those of you that might be saying, wait a minute, I thought ASML was reporting earnings tomorrow. Not sure quite what happened, but it seemed like there was an early unintentional leak of the earnings. I'm not sure on that, but it did come earlier than expected, it looked like.
Yeah, that's what I heard. I don't know the details either, and that might have added to a little bit of more the panic, because whenever you get news that's unexpected or ahead of time, it always throws everyone because you're just not ready for it. But let's go to Nvidia, which is a big position for us on leaderboard. It's something that I own as well.
And SwingTrader.
Yeah, I meant to say SwingTrader, but
it is a big position in leaderboard as well.
It's a big position. It's a big position,
and I own some as well.
Yeah. So, and everyone under the sun pretty much has it. And so you look at that and say, okay, this was your leading stock, not ASML. And how did that handle itself? Well, it was down almost 5% today. That's not a fun day at all. But where did it stop? It stopped above our 21-day, which is helpful, the green line. And even though it's down in after hours, it did stop above that last marked high, the 131.26. So we like staying above those. We'll see if what can happen tomorrow. It looks like it wants to come in and touch, at least touch and test the 21 days. So we'll see how it handles itself there. If we get, if it's weak enough, we're going to have to start, reducing some. We were right on the fence there of reducing this today, but we decided to reduce some other ones first because this was one of our A quality stocks. So we were trying to give it the benefit of the doubt and give it a little bit more room. I think if the market would have been open for another hour, we probably would have trimmed it. But again, this is not broken, but it could certainly handle out here or shelf out and just go sideways or drift down before it tackles those old highs, the 140.76, the furthest marked high to your left. So that would be normal and natural for it to go sideways or come down. It wouldn't be normal for it to undercut the 50-day. That would be abnormally weak. So we know that probably a 21-day test is in the cards. So you kind of have to prepare for that. And so one of the things you can do is kind of reduce some other high octane exposure and go into some slower, pokier names. And that's something that we did today. We can pull up Walmart, I think, was one of the ones we were going to talk about.
Mm-hmm. And I'm noticing it's a little quiet in our YouTube chat today. So just want to check and make sure people that are there. Usually there's a little bit more. I do watch and look for comments in the YouTube chat. I'm not seeing any right now, but I do know that there's people there. So yeah. Come and join us and chat if you want to. I'll try and address anything I can during the show.
Yeah. I can't watch those. It creates some feedback on my computer. Plus, I got thin skin, so I don't like to look at those.
Yeah, I think maybe people are still in shell shock from the day. So.
I know, man. I am. It was a bad day. So look, rotating into some of the things that are slow and pokey that don't have earnings right around the corner. Is in Walmart is kind of a classic one of those. This isn't something. Let's go to the monthly chart on this, just kind of get a feel for what we're dealing with. And this has had a huge move recently, But if you just focus on the relative strength line,
Especially for Walmart.
for Walmart, I mean, it's kind of a change of character. GE did a similar thing. Let's pull up GE on the monthly. It had been a dog for a long time, and then that turned it. And it feels like we're in some ways reverting back to the old leaders to a certain extent. And so at least money is flowing there and into names like General Electric and into Walmart. So let's go back to the Walmart and let's look at it on a weekly basis. And so with this, it's just forming this little flat base shelf type of pattern, in that your 10-week moving average, your red line there, has just been catching up to it. So this does not feel like the Walmart that we all know. It's acting a little faster than normal. So we wanted to give it a shot. Let's go over to the daily on this one.
Also worth mentioning the real improvement in this relative strength line. Again, compared to like what you were saying on the monthly chart, a lot of just, downward movement over the last, decade. And then we're seeing just some real strength on the weekly. And then, as you mentioned, on the daily chart as well, now that we shift over there.
Yeah, so really nice and tight here. Is taking out that marked high, the 8160, which means it looks like it wants to make another leg higher. And there were some other ones in this general space that were looking good. The Costco one that we prefer was actually, not acting that well. It's still above its 50-day, but they're pretty close competitors, and there's just kind of a disconnect there. So even though I like shopping at Walmart more than I like shopping at Costco more than at Walmart or Sam's Club, you just go with where the action is. So that's why we were going there. It's more of a safety play because we wanted to stay heavily invested because of the power trend and the way the S&P was working. But let's go over to the Qs for a second. And we did have to pare back some exposure in that area, just because it looks like it wants to come down and maybe test the 21-day or undercut that, or even come into your old mark high of the 485.54. And we didn't want to wait, for that further weakness before we took some action, because we've got a double on there with the QLD. So we reduced some there, and we're going to try to stick it out with the rest of that position. But we'll see.
And notably, this is also the relative strength line did cross below some of those moving average lines on the daily here.
Exactly. And that was one of the other things that we were looking at. We're always focusing in on that RS line with those moving averages, as a key part of how we look at things. And so it's certainly not the strongest index there, which was another reason why we have a bigger weight with the SPY than we do on the Q side. And if we have to completely get rid of it, we will, but we'll look for other places to rotate into that are acting better with stronger relative strengths.
Mm-hmm. Right. Another thing to just kind of mention in terms of a stock that was setting up was Viking. Now, this was a nice, it looked bad at the early start, but a nice reversal. I did pick up some of this myself after the restricted period was over today. Now, talk a little bit, because we kind of wish we were in Royal Caribbean, RCL. That one has been the stronger one. CCL, not looking too bad either. That recently broke out. Is this kind of the also ran, or why go with this one?
Because the leader, RCL, was out of position, and this is a group move, and the group is working. The RCL is, by definition, it's the leader in the group, and no matter how you slice it. Then and they compete directly with CCL and CLH, and they are the best ones. Now, Viking, and I did pick up a position in this after a restricted time as well. This one is slightly different because they're the river cruises, kind of an older group of people that tend to go on there. As it's more European based. river cruises versus your worldwide ocean cruises. So that the other ones do. So it's slightly different. It's a recent IPO. Let's look at the weekly for a second. And let's go down to the quarterly numbers just to see what we're dealing with. So this is the one problem here is one with when you have a recent IPO, sometimes it takes a little bit of time before the earnings are 100% accurate. That's a topic for another day, but it's a little bit on the weaker side than what we like, and that's why we're keeping it at a smaller position, and we'll probably keep it there. But it looks really good. And this, you went public at 24 and really haven't looked back, and you've formed this nice space up here. And this just looks like the way a model book stock looks at the beginning of its move. Now, we've both talked about this a lot. We look at stocks and we always have the best intention, or best hopes that it's going to be a model book stock, and most of them aren't by definition. Only very select few are. But this is how they look before they make a move. It's 6 weeks up in a row after a recent IPO with nice prior uptrend. How deep is that base?
18%.
Yeah, I mean that's ideal. Technically it's not an IPO base because the left side was further than your 5 weeks out, but it's in that family of an IPO base. So I think it looks really good, and we'll see how it plays out.
Mm-hmm. So just since we brought up the fundamentals on this one, by contrast, if we pull up RCL and go down to the quarterly numbers here, certainly stronger, a little bit more. I mean, look, COVID hit these hard, it hit them all hard. And so there is still a recovery period. So you are seeing a, return from losses, negative EPS, but certainly some stronger numbers there for RCL. And just to kind of round out that discussion, looking at CCL, since we brought that up, some stronger numbers there as well. But as you mentioned, Viking does have a setup, on the technical. So really looking good. We do have some comments coming in from YouTube, so I just wanted to kind of address some of these. I'm going to go back to Nvidia because someone was mentioning that they thought that Nvidia hit the 21-day moving average line today. Keep in mind, when we say the 21-day moving average line, we are using an exponential on these charts. It just kind of moves a little bit faster with recent action, and so it makes it go a little bit tighter. So I'm not sure exactly what setting you might have been looking at for a 21-day, but that's what we have here. And also I wanted to address, this is a great point. Someone brought up IWM, something we were talking about, IWM being the iShares Russell 2000, the small cap index, looking a little bit stronger. I mean, it closed up for the day, well off its highs, but still up. And while we're there, why don't we also address MDY, which is the S&P midcap 400, also kind of looking like it's potentially perking up, although it did close down today.
Yeah, and I have been personally trading back in that space, but we haven't put it on SwingTrader, the IWM or the MDY this go round, just because every time we've been putting it on, we've been getting chopped up with it. So we decided to pass this time, but it does look very interesting. They had weak closes today, but pretty much everything, not everything, but the vast majority of things had a weak closes just because it was a weekday in the market. But I do think this is an area, if MDY or IWM can kind of go sideways or give us an entry point, an upside reversal, anything that's a logical entry point. By logical entry point, meaning it has a decent exit strategy that is within 3 to 4% from wherever we put it on. That's what we're looking for. So right now, this is it's too far extended out of there, and it looks like it wants to come in a little bit. So if it comes in a little bit and then it has an upside reversal, I'm certainly open to, there's lots of ETFs in this space that we could go with, because it does seem like things are broadening out into the small in the mid cap space again.
Mm-hmm. So speaking of broadening out, I'm just going to go ahead and throw up our pie chart that we go over every week to kind of show where we're at currently. So the ETF space is continuing to be where the bulk of our weight is right now at 25%. And this is, when I say ETF, I'm talking about the diversified ones. So of course we have our exposure to SPY and the Qs, although we did reduce the Qs exposure today. We have some other ETFs too, kind of hitting the builders, the home builders, crypto. We've got, some financial. So, but certainly if we compare it to last week, this is where we closed last week. And I mean, we were certainly broadening out. We did go a little bit more into tech with some software and some chips. But this is still pretty broad. Retail, chips a little bit heavier because of that Nvidia position, but kind of spread out a lot.
On purpose, because of days like today, and I think I forgot to mention, I do have a position in SPY and Qs that we've talked about.
As do I, leveraged positions for myself.
So with the fact that we're going into earnings season, we're at the beginning part of earnings season, we wanted to be spread out because you're going to have days like today. This is not going to be the last time that we're going to get hit hard during earnings. That's just the name of the game. It's very frustrating during earnings season because you can't read it the way you used to be able to before Reg FD, which is a topic for another day. But anyways, expect gaps up and gaps down. So how do you handle that? You either go super light in the market, nothing wrong with that, or you spread yourself out amongst groups to try to live through days like today. So some of our other exposure helped balance things out of where we were getting hit hard today, with the things like Nvidia being down about 5%. That when it's your biggest position or one of your biggest single position, that takes takes the account down. So you have some other stuff that weren't getting hit that much or were marginally up to help balance things out a little bit. And that's with diversifying. I mean, that's just the general concept. Isn't a bunch of stocks, it's a bunch of different types of stocks. So that's where the ETFs help, because they get the built-in diversification, but also some smaller stocks that we have, like a newer one like the Viking that we talked about, or an old school one like a Walmart. They couldn't be further apart. Like they shouldn't trade together, even though they were both up today. There's not a lot of overlap there.
Yeah. So for those of you that maybe remember your statistics classes, go back and reread the definitions of correlation. That's what we're looking for. It's kind of like that uncorrelated. But one of the problems here has been, and look, we've been complaining about this for a few months now. I feel like more than a few, the rotations. It feels like as soon as something starts looking good, what's that?
Can we stop with the rotation stuff?
Right, exactly.
I'm sick of it, man.
Yeah, and it does make it very tough, because again, you look at the indexes sometimes, and all you see is, oh well, the indexes are looking fine. When you kind of look at it, take that step back, especially if you're looking at a weekly chart. But what you don't see sometimes, just by looking at the broad indexes, is how much rotation is happening under the surface. I mean, I thought it was really interesting that yesterday, XLK and XLU were the top, sector spider ETFs. Like,
yeah.
And SPY was getting to new highs. How often is that happening where, you have XLU and tech both, leading for the day? And XLU has been looking really strong. So just kind of, again, we're frustrated by the rotations. I'm sure a lot of folks out there are frustrated by the rotation. How do you kind of deal with that frustration?
Well, I don't drink anymore, so I don't have that to go to. So, just kidding. Well, not kidding. But what I like to do is do what we're doing or attempting to do by having a core position in the double SPY as our biggest weighting. Because if you can't beat them, join them. And so we're doing that with not just saying we're giving up and going with SPY. It's like, okay, we're in a power trend with SPY. It's the leading broad-based index. Go with your leader and then do a double weight on it. Plus, we're doing double weight of a leverage. So we've got a massive bet there with what the leading stock or index is. And that's what Bill has taught us to do. You know, he would be very concentrated into one or two stocks. And so we're doing this with the ETF that is working that to help balance out with these rotations. But frankly, I think the only other way to do it, unless you know what the news is going to be the next day, like there's no way.
Even if you do know what the news is the next day, sometimes that doesn't even help.
Yeah. So this ASML news, that from what we saw, because we were both extremely busy, is that they had some negative guidance going forward. And so if we would have had that same report ahead of time, we wouldn't have known what the reaction was going to be, because you can see some things with, you look at the earnings and the guidance and everything looks good and the stock goes down, or vice versa. So it's really all about the reaction. So there's really I don't think there's a way to game that. So the way you do it is you do have a core position in the leading stock. So that's what, we've got with the SPY, with SSO, and then you broaden out. So instead of, even though the chips are thought of as the best group and the AI is the best theme right now, which arguably it is, we don't have a portfolio that's filled with them. We have our Nvidia position and a few other things that might be, have a little bit to do with it, but that is really our core AI play. And then everything else is, we've got a little bit of everything to deal with that. But it is frustrating. We're trying to work on that daily, but it is a frustrating market, just being honest.
Yeah. So I also wanted to kind of address one of the stocks that we did take off. And again, this was Arista Networks. Part of the issue here, of course, was, we acted fairly quickly on this. We took a portion off early on in the day, and then another portion off as it kind of crossed 400. And Arista Networks is just one of those that it's very vulnerable to a lot of different stocks, because it's a supplier and, it has a lot of different, it's got its hands in a lot of different things. So I wanted to also just address real quickly.
We took that off pretty quickly this morning.
Right. Yeah. So again, trimmed it and then, removed the remainder, right around 400. But I did want to address just a quick little change that we made to one of our calculations. So for those of you that do get the SwingTrader product, you do notice that in the trade setup, we do have our average cost and our average exit. And, one of the things I've been doing just to kind of keep it easy for people to make those calculations themselves is I've been doing a very simple average, just saying basically assuming that it was equal shares. But the reality is when we're doing our performance calculations, we are treating this as a model portfolio. So that means a lot of times that the shares on later buys are actually smaller. And so it's not truly an average, it's a weighted average. So I did switch that starting on Friday to be a little bit more accurate. And it doesn't usually make that much of a difference, to be honest with you. But in certain ones like Cava, I'm just going to bring that up real quick because that's actually going to be one of the stocks we talk about next. In Cava, the difference was because we've had a lot of different trades on this one. For Cava, the difference was about, 118 if you did it treating everything equally. But we have some really low average cost stock with more shares, and the ones that we've been buying a little bit later here, a lot fewer shares. And so rather a true average cost is really closer to 116. So I just wanted to let you know that that's a change that we made just to kind of be a little bit more accurate. It's not as easy for you to calculate yourself because you don't have the share amounts that I'm using, but it is more accurate and more reflective of what's actually going into our performance numbers. So since we're on Cava, I just wanted to address that real quick. But since we are on Cava, let's talk about this a little bit because CMG, some folks were asking about this. CMG is, we've always talked about Cava as being the Chipotle of Mediterranean food, and Chipotle decided, well, maybe we're going to get into Mediterranean food, and that kind of shook things up for Cava. Is this a big deal, or why do we kind of hold on here? And I do have a position in Cava myself.
Yeah, I still have a position. It's still my biggest position. This morning pre-market, I saw that was weaker than a normal. Like when you trade a stock a lot, you get to know what's normal and what's abnormal. And it was like there's something abnormal here. And then I think Ed told me about the news that you had mentioned, and so I quickly, was looking at the company that it was investing in, and if I got it right, they only have 6 stores. I think they were in Ohio or something, and it just looked like a knockoff. So those things can tend to hit a stock, 2 to 3 days down. And early on, I was just prepared. I'm like, okay, it's going to come down for at least 2 to 3 days. That's kind of my standard just assumption when sell-offs happen, because in a strong stock, you can get that 3-day hit and then bounce back. Weak stocks, it won't be 3 days. It'll be 5, 8 days or more. So anyways, I was expecting more of a sell-off just because of the headline, because I figured it would take a while for people to really look into it and see it's kind of a non-event. To me, I look at it as positive. It means that CMG, let's pull up CMG on a monthly. I mean, CMG is probably one of the best restaurant stocks around historically, like a McDonald's. McDonald's was the first real big one, and this is at a monster moves in there, and it might come back to make another big leg higher. If I was CMG, I would have just started their own one rather than investing in something else, and maybe they end up doing that. But so,
and for those of you that might not remember, McDonald's was actually, I mean, that's kind of what they did with Chipotle.
yep.
McDonald's was like a 99% owner when Chipotle only had a few stores, and I don't remember when they sold their stake, but yeah, this was originally a McDonald's kind of offshoot, right?
Yeah, and it took a long time to build out. Now let's switch back to Cava. And I think that with this one, you have that potential to have a CMG type move, or earlier in its day, a McDonald's type of move.
Mm-hmm.
And the fact that CMG is saying, hey, we need to have some exposure in this space tells me that, the whole Mediterranean food thing does have legs, or at least CMG, they're very smart, thinks that it has legs. And so they're allocating some capital there. So I look at it as a positive, intermediate and long term, but short term, it was certainly negative. And so we trimmed a little bit, earlier on in the day just to be proactive. Now let's go back to the daily on this one, and I just kind of walk through how I'm looking at this. I'm thinking that this is similar to an ascending base. And so you had your first pullback and you recovered to new highs. Then you had a second pullback, recovered to new highs. So on your third pullback of an ascending base is typically very shallow and shorter than your earlier ones. So what I'm looking at is something that is going to be shallower than those earlier pullbacks, and hopefully hold above the 21-day, or maybe it doesn't even get down to the 21-day, but that's what would be normal and natural. So I think a push is a win in this case. If we can go sideways here for a little bit of time and then take out yesterday's high, I think that would be fine. Let's go to the intraday on this one to kind of show how it was able to come back on such a weak day in the market. The sell-off on the news happened. I think, everyone probably did the same thing I did. They pulled it up and saw there's only a handful of stores out there, and it's kind of a nothing burger of a story. Now let's pull up the Qs on the same time frame to see the difference. And so that one was weak and then continued weaker. And let's pull up ASML on there as well on the intraday. So that's what, weak, and then you got a little bit of a blip up at the end, but so it's completely different. And so that's telling you that Cava is still acting like a leader, but you take it one day at a time, and we're not going to plant our flag in and just say we're going down with the ship on this one. If it starts doing things really wrong, we will start backing away from it. But this is something that we might make into a larger position if it takes out yesterday's high.
And just as a reminder for, to kind of reiterate on the ASML thing, that was actually something that happened during market hours. It was not before market hours. The news came out, I think, a little bit over an hour into the session. So again, it was kind of a surprise when it came out. And I think, people had to react very quickly. Oh, we weren't expecting this, a little scramble, how do we revalue, so you didn't have that after hours or pre-market to kind of do some of that, the analysts doing their spreadsheet updates and everything for valuation numbers. Mike,
the market does not like surprises,
yeah, right.
at all.
Uncertainty and surprises are not good.
Yes.
So let's go ahead and wrap things up. You want to talk a little bit about maybe some other stocks that are set up that we've got an eye on? I mean, Spotify was one that we talked about. That looked pretty good in terms of support right there at the 21-day moving average line.
Yeah, that looks. If we had more time left in the day, we might have added that to it as a nice little upside reversal. I think if it breaks that downtrend over the last 4 days, that's a place where you can buy it or add to it if you already have a position in it. I just call this a little shelf. It's come out of a base and it's formed something too short to be a standard base, but I think that looks solid. And on top of that, it's even tighter than the last bases, and the last bases were tight. So only 16%
here, 13% here, 15% here. So yeah, very tight.
Yeah, so that's at the top of our list to look at.
Toast is one that we were looking at. It got support right here at the 27.88, previous high, but this one has a larger ATR. It does move, and so we kind of went with Walmart instead. Let's go with something a little bit less crazy, right?
Yeah, I did end up at the tail end of the day buying some for myself when we decided not to put it on, and it was just, I think it looks fine. It was just that we were getting hit because of everything. Pretty much everything was getting hit, and it was like, oh, do we want to stick our neck out on a high ATR stock that late into the day on a first day sell off, or go with something safer like Walmart? And so I think it looks good. I love their technology. I'm always paying attention to restaurants that are using them and talking to the servers about what they think about them. And I always have that Peter Lynch hat on, and it really is something. If I was a restaurant owner, I would definitely want Toast or one of their competitors, because it just makes everything so much more efficient. And that's a hard business. I mean, restaurant business is very, very difficult. So anything that you can do, whether it's robotics or AI chain or supply chain, anything you can do to help with those margins is a big win. And so I think this is in the right space. And if we have to put it on the list, I'll just sell it in my own account first, and
yeah.
We can always.
And so, just as a reminder for folks, if you aren't members of SwingTrader yet, this is something where we do send alerts out throughout the day. You can kind of find out a little bit more on our thinking of position sizing, where we're at in the entire market, to kind of see what our exposure levels are. So a lot of benefits to the SwingTrader product. I think that's going to wrap it up for us this week. Any final thoughts, Mike?
No, just after a bad day like today, unless you had a great day, go do something healthy. Go for a walk, a jog, ride your bike. If you live by the beach, go down, see the beach, see the lake or something. Just try to de-stress in a very positive way, and we'll be back again next Tuesday.
Yeah, and don't forget, we're also on IBD Live every morning. We start 10 minutes before the open of the market, and we go for a full 90 minutes, 100 minutes, so you can get some live action analysis. You can always go for a trial there at investors.com/IBD Live. Thank you so much for our YouTubers that joined us live, and we appreciate that. Thank you so much for your comments. I'm glad everyone was awake there and still breathing and not too shell-shocked. We appreciate it, and don't forget to like and subscribe as much as possible. We'll talk to you all later. Thanks a lot for watching. Bye-bye now.